Alright, in this video, I'm going to show you how you can use the session times, how to find the obvious level of liquidity and where price is more likely to go to because price bounces from a liquidity pool to a next one. So in this example, we are going to go, let's say you have your Asia session, your London session, and then you're going to enter at New York session. So let's say, for example, price is doing this in Asia. We're going to London. New York has started. And then here is 9:30. And this is where price is going to open. So what we want to do, we want to mark out where is the Asia high, where is the Asia low, where is the London low, and where is the London high. So if New York comes and Asia sessions high has been taken out, then we are not going to take this one in consideration. New York has started. In the start of New York, we took out London low, and then as well at 9:30 open, we took out, for example, Asia low, and then we are going to wait for a reversal to the opposite direction. So we're going to go through the session liquidity. I'm going to show you step for step, and then I'm going to show you how to enter from it as well. So let's get straight to the charts using only a fair value gap and the help of the Flux charts price action toolkit. Link is in the description. Go check them out. All right, so I'm here on the 15 minutes of this day. So let's quickly see what happens. So what you want to do, you want to mark out 12 o'clock the previous day. Then we have 6 o'clock. Then you're going to mark out 12 again right over here. And then as well, you're going to mark out 6 a.m. right over there. So we have our previous day session, the last session, the new day. And here we go. We have our Asia. This is our Asia highs. This is our Asia lows right over here. We have our London highs right over there. And we have our London lows right over here. And now we are waiting for 9:30. This is 9:30 to open. So we already took Asia highs. So we can delete this one right over here. We already took the London high right over here. Let's keep that in so you can just see it. Here is 9:30. So let's just fast forward a little bit until 9:30. There we go. 9:30 has started. So it's Asia, London, New York, and then New York open. So before the open, the pre-market high, there's a high right over there. The pre-market high, pre-market low right over here. And now let's go down to the 1 minute. So here you can see that pre-market high. We pushed up, we took the liquidity. We had a shift happening right over here after there was small liquidity taking right over there. And also we have a bunch of fair value gaps. We have a fair value gap that has been inverted right over here. So that's an inverse fair value gap. Plus we have a fair value gap created right over there as another confirmation to push down. There the indicator has plotted it out inside of the fair value gap. So you can take your entry right over there. You can put your stops on the bodies of the first candle's fair value gap, and you can target a fixed 1 or 2 risk to reward trade. And let's see how this one plays out. As you can see, we got stopped out right over there. If your stops was above the highs, you would have been safe. If it was at the bodies, you would have been taken out. So for me, I would be taken out. If you have more conservative, you still be in the trade. But for the case of this video, let's say you have been taken out. So this fair value gap was created. Let's just delete this one. Then again, we created another one right over here with another shift happening. So enter there, stops above the bodies. You can target a fixed 1 or 2 risk to reward trade. And let's see how this one plays out. As you can see, beautifully it played out. So for me, one losing trade, one winning trade, beautiful day. And now, as you can see, pre-market low price took this out. We are currently having a big push up. We are creating inverse fair value gaps, as you can see right over there. This fair value gap turned into an inverse fair value gap. So you can enter right over there, stops below those bodies, and you can target a 1 or 2 risk to reward trade. And let's see how this one plays out. By this stage, you have already a 1.3 risk to reward trade. So this is a good time to place your stops at break even. Let's continue price. Stopped out at break even. So there's another break even trade right over here. So one losing, one winning, one break even trade on the same day. All right, let's look at another example. All right, so let's see what happens here. We have our Asia, London, New York, and then our 9:30, our New York open. So let's mark out the liquidity pool. So this is Asia low. We already took Asia high. Here's London high. We have London low right over here. Okay, let's play price forward. Let's see what happens. There we have our pre-market. So we took our London high before New York open. There's our pre-market high. London low has been taken. Asia low has been taken. Okay, so we have our pre-market low right over here. Let's wait for some sort of sweep on this pool or this one right over here. There we go. So as you can see right over here, we took this low. So now we can jump down to the 1 minute. After this pre-market low has been taken, bunch of fair value gaps. Nothing has formed right over here. Nothing has formed, nothing has formed, nothing has formed. Here was our very first fair value gap right over here. So what we can do, we can enter right over there, stops below the bodies, and we can target a fixed 1 or 2 risk to reward trade. And let's see how this one plays out. It's playing around a little bit. This one can be a break even trade actually, because we're already on 1 to 1. Tapped out our entry again, still consolidating, and there we go. Nice and beautiful trade for this day right over here. All right, so I hope you found value out of this video. Go have a look, Flux Charts Price Action Toolkit that draws out these awesome fair value gaps for you. Hope you enjoyed it. Please leave a like and subscribe. And then I'll see you in the next video. Cheers.